Hello and welcome back to the channel. So I've just released my second article on Substack, and it's all about the Bitcoin mining stocks and what is my update on them. As you know, we've been invested in the Bitcoin mining stocks for a while now. We actually bottom ticked the market. If we check out this video, I created this video in November 27, 2022, and we can see RIG at the time was trading at $4.43. That is actually the lowest it got to during that our most recent bear market. So we really bottom ticked the market there. Unfortunately, we didn't put enough capital in at that time. So we have been averaging up. So our cost basis has climbed. If we hadn't done this, it would have been an absolutely amazing entry, and we would already be up a number of multiple on our investment. That's neither here or there now anyways. What we're really going to cover in this video and what I covered in this article is basically what I think is causing really this downward pressure on the miners. So let's just check out how the miners have done against Bitcoin. Remember, in this video, we always outline the thesis that the Bitcoin miners were a leverage play on the underlying commodity. In this sense, it would be Bitcoin. Just in the same scenario where gold miners are a leverage play on the underlying commodity that is gold. We're kind of trying to do this exact same thing, but here with Bitcoin. And unfortunately, it did not really play out the way we expected. Now, Bitcoin has done something a little bit unprecedented, is that it's actually broken its all-time high before the halving. And that's something that we've never seen before. So that was really interesting. So already the market is very different from what it was before. But nevertheless, Bitcoin is currently trading around 70K. Now, depending on when we take this back, let's just say 6 months back or something, right? So here we see, I just stopped randomly, I know you can cherry pick, but generally, the numbers change a little bit, but yeah, generally it's the same. So let's just go here, October, okay? So, for example, Bitcoin has increased 170% since the last 6 months, let's say. Now, given this increase, we would expect that the miners would be trading, as we're expecting the miners to be a leverage play, we're really expecting them to be like a multiple of this. And the only miner that actually beat Bitcoin and it was actually a leverage play on Bitcoin, let's say, is CleanSpark. And even that game wasn't exactly, it was quite marginal, to be honest, from what we're expecting. As you can see, some of the other miners, like, I know it's a little bit cherry picking the number, but let's just take Riot, for example. Riot, which at the time, or still is, like the second biggest crypto miner. I think CleanSpark has overtaken it. But this is the second biggest crypto miner, and Bitcoin just increased 170%. And the miner is -7. -7. Iris Energy is only up 15%. Bitfarms 50. Marathon Holdings, the biggest Bitcoin miner, is only up 65% compared to Bitcoin. So basically, what I was expecting Bitcoin miners to do, they have not done. They've actually kind of done the opposite. So really, you would have been better off holding Bitcoin. So, and like here we can see that CleanSpark was doing pretty well, and it's the only one that's really beaten Bitcoin. And it's not even by a lot. Not even by a lot. So what is really the main reason for this like underperformance of the miners? Actually, this was a good point, actually. Yeah, so as you can see here, when Bitcoin was trading around 25 to 30K range, Iris Energy was much, much higher than what it is currently now that Bitcoin is at 70K. Which just makes absolutely zero sense when you look at the chart and what would you expect to happen given previous cycles. My main belief is why the Bitcoin miners are underperforming Bitcoin is basically due to this single reason. And this single reason is the dilution of share by the companies. As you can see, every single crypto miner is diluting their shares. And of course, by diluting their shares, it means that there's more shares that they're selling into the market, putting massive downward pressure on the stock price. So all of the miners have done this. And to be honest, this was expected. This wasn't something that came from like left field. We know the miners have to dilute, because if they do not dilute, that means they will go bankrupt. The halving is coming up. They need to increase the hash rate. They need to mine more Bitcoin just to stay competitive and just to have a positive cash flow. But I think what really happened is, because Bitcoin broke its all-time high, like I said, 70K already, you would expect the miners would follow that. But because they've been diluting while Bitcoin has been going higher, it's just putting massive downward pressure onto the share price. Now, I imagine if they weren't diluting, and this share price would just be rocketing higher and higher. But eventually it would come to the point where no one would invest in this company because there's no future, because there's no growth. And that is my whole thesis around it. And I believe these companies do need to dilute. And once they do finish diluting and they're all funded up for the growth plans, these stocks will do amazingly well, and patience really will be rewarded here. And for this, I actually wanted to look at what did Riot do in the previous cycle. Riot, look, this is Riot's outstanding share count. So let's do 5 years, right? From 2020, well, here is 2019, it was 14 shares. And that has basically expanded all the way up to 253 million. Well, what is extremely surprising is just look at what was happening in the last cycle. So Riot, remarkably, from a penny stock, all the way surged up to $70 per share during the last bull market, and this was all while diluting. So if we take a look here, right? So you can zoom in at this section right here. Where is it? This section right here. You can see this downward pressure on Riot as Bitcoin is actually climbing during that time. You can also see it here as well. You can see this subtle downward pressure. Well, this was basically, they were all diluting at this time. And once they did finish diluting, what happened? Bitcoin started to rocket past its all-time high, and Riot was set up to capitalize on that growth. And the share price shot from around here, $3 to a peak of $77. And that was all while the dilution was taking place. Now, as we can know, this is a clinical sector, and you know what will happen. Eventually, it will go will go down as Bitcoin, down. But you have to understand it. Even though there was such high dilution, it still made a higher low compared to. It never got lower than. It never even got to the $2 range, even after all of those stocks had been issued. So yeah. And I believe that it's only because Bitcoin is so high and has broken its all-time high that, we're expecting miners to basically be much higher than they are now. Whereas if Bitcoin hadn't broken its all-time high and it was still, just sitting at its, not at its all-time high, and it was going into halving, and the miners were diluting, we wouldn't be like so angry with them or so frustrated with them. Anyways, I feel like the history will repeat for these stocks, and yeah, that's because their revenues will grow as they're expanding. Investors will get more and more confidence from them. And again, we already mentioned that it's in this article anyway, I mentioned that, it's an election year, and that the Federal Reserve and Helen, the Treasury Secretary or whatever, yeah, they're very pro-Biden, and they cannot have the stock market going down while it's an election year if they want their party to be elected next year. So that's extremely important. And yeah, I do think the printer will start firing back up, and I think confidence will come into it, and we will see this this crazy expansion of share price again. So one other thing I will leave you with is, this one here. Volatility is the price we pay for admission. The price inside is superior long-term returns, but you have to pay the price to get the returns. So basically, summing it up, volatility is the price we pay for huge returns. So you got to give something to get something. And in my opinion, I know the swings are crazy. I'm experiencing them with you. Just look at that iris swings there in the blue, in the light blue. Yeah, it's been some kind of roller coaster, but yeah, not doing anything. I'm not touching them. I think they're still on the paths to greatness. Yeah, please give my Substack a read. I think I do a much better job like in written format than I ever do in talking. It would be great if you can give me your feedback. Okay, thank you.